Hello everyone, how are you? Welcome back to Lunch at the Market. What a day. The Dow, the S&P, the NASDAQ all look like they were just going to sell off. It wasn't going to be too tremendous a day. The next thing we know, here we are post-lunch, and pretty much everything is up except for the banks. The banks actually look pretty terrible. We went ahead and rolled out our Goldman Sachs 150-145 short put spreads. We're going to roll those out to July. Same position size, taking an additional 20 cents per spread. We're going to stay in the trade, even though technically it's already gone against us. If we wanted to, we could really press it into May OPEX. Have the stock close at around maybe 149.50, 149.20. The spread will be worth 80 cents. We would capture the difference between what we sold it and what we'd buy it back for. But the reality is that if you look at when Goldman Sachs has been down at this level, it's usually surrounding a lawsuit. It's usually resolved in a certain period of time, and it's just a matter of kind of waiting those out. So what we've done is we've moved those out on the curve, and then we've shorted the 145, 140 put spreads that only have now 9 days left to trade. There's a much higher probability on that spread, and again, this 150 level has really held in terms of where the stock has gravitated towards. So we don't mind being short. We went further out on the curve. It gives us plenty of time. There's now 2 months. We've got to make it all the way through the rest of May, all the way through June, and then into July to July OPEX before we become concerned. So we'll reevaluate this position towards the end of June. Obviously, if the stock trades up between here and then, we may take it off above 50% profitability, or we may try to press it into the close. Ideally, though, Goldman Sachs trades at a single-digit PE, has a ton of cash, and is a very well-run franchise. And so there's not a ton of risk to the downside, and as long as we continue to stay profitable on the trade, we're going to continue to stay in the trade. Okay, something else that proved to be very helpful this morning, rare earths were down. As I take a look at my screen, all of those have since gone from the red into the green. Molycorp, we did get to sell the 60-55 put spread and the 62.5 60 put spread. This morning we sold the 60-55 put spread, collected a nice premium there. The stock was down over $1, almost close to $2. The stock has since then traded up into the green, and again, we're looking at 9 days left until options expiration. And so what we're looking for these days when we sell a spread is what can we beat to the calendar, right? So if the stock is heading down, all we want to do is find that level that it doesn't have time to get to. Not saying that it won't get there the next month or the month after that, but we want to find out what can we beat to the end of the calendar. So with 9 days left, time is really starting to be on our side. So we're looking for those opportunities. CRE and Vico Instruments are both red in today's session. Those two tend to trade together a lot. They're not meaningfully down. They're just down in an otherwise strong tape. Everything else other than the banks, which is what led us to roll out our Goldman Sachs trade, the banks have really been hated. And I think honestly, you may want to just completely avoid the banks until you get the first rate hike. If you don't mind taking some pain, there's very attractive valuations in the banks. Most banks are trading with a single-digit PE. Some of them are really starting to put their dividend back in place. Some of the foreign banks, like a Banco Santander or a BMA, so Banco Santander is STD, BMA is another bank. Both of these have really juicy, better than 5% dividends, but there is international concerns. There's credit concerns internationally in Argentina, which is BMA. There's concern over nationalization. The government owns about 30% stake in the bank right now, and it looks like they removed their proxy vote ceiling. They were basically only getting to vote on 5% of the outstanding shares when the government actually owned 30% of the shares. So obviously that's a huge concern to investors as the government gets its hands more in there. Arguably the only reason that they're doing so is because they see it as they can gain some kind of advantage for the bank over and above the other shareholders. So again, you know, there's a lot of dicey areas out there, but as long as they continue to pay that dividend, BMA, STD, those are two international banks that we do like, that we do currently hold right now. We've got positions in both of those. We're actually going to be looking at adding to Banco Santander, STD today. It's the safer of the two banks. BMA, we do have concerns about that government intervention, but the stock has been really, really beaten up. It's down $20 a share over the last 6 months, and it's extremely attractive, trading north of a 5% dividend with massive cash on the balance sheets. I mean, we're talking huge percentage of the share price is cash on the balance sheet, and that's always bullish for us. It always gives us the impetus that we like to buy names like this. Let me see if I can get you that exact statistic in terms of the cash that's on the balance sheet. We sent out an article earlier today with stocks that were trading with extremely low PEs with really big cash positions. Yeah, $22 a share in cash, and the bank's only trading at $34.67. So on BMA, we're going to just sit around and wait for this story to play out. The forward PE is only 6.6, and the PEG ratio was 0.56. So another stock that's on that list that we do like a whole lot is Bunge, BG. It's trading near its 52-week high. The PE is 4.6 as the trailing PE on Bunge. The dividend yield's only 1.3, but again, this is a company that has a tremendous balance sheet. They've got $5.48 a share in cash on the balance sheet, and that dividend is more than covered. The forward PE is not as good, so analysts are looking for earnings to decline in the future, but we're still talking about a PE that's only 11.2. That's way under a market PE. I think until the stock trades at around a 14, 15 PE, we feel pretty confident there. The other stock that we want to highlight today that's gotten to our buy level is SSL. The major integrated oils around the world have seen a pullback on the price decline in oil. This stock is trading at $52.57. $52 level, that was where we were looking at. This one also trades with a PE that's attractive. It's 12.3 is the PE on SSL, that's Sasol. The forward PE is only 9.8. I mean, it's extremely well, very attractive valuation. Company throws out $62 million in free cash flow. It's got a $3.31 per share in cash. The dividend is only 86 cents, so the dividend is well covered. So again, SSL and STD are the two companies, both of which are international companies with dividends that we look at in today's pullback. Other than that, we're taking risk off the table. Express Scripts, we had some January 2012 in the money calls that were up over 30%. We took those off the table. JDS Uniphase, we were short put spreads in May and in June. The May ones were up over 90%, the June ones were up over 80%, and we had some in the money 15-20 call spreads for January of 2012. We took the entire position off. Again, we're just continuing to dial back risk. We continue to want to have tons of cash going into May and June, which are again seasonally weak periods of time. So we're kind of balancing our bearish bullish stances by initiating or adding to positions like SSL, which we sold out closer to 60. Now we want to get back into that stock now that it's come down. We do like the oil space, we like the energy space a lot, and so we're looking to add to places that seem attractive and then take off where we have better than 30% gains. On an annualized basis, if we finish up 30% over the course of the year, we'll feel extremely good about ourselves. So when we get a position that hits above that target that we have for our full year, then there's really no sense, at least right now, while there's no clearly defined trend in the market, we'd rather take that stuff off the table. Thanks for joining us again today on Lunch of the Market. Have a wonderful day. We will see you from the SALT conference. Don't know that we're going to have a video episode for tomorrow. We're going to be on the plane headed out to Vegas for the SALT conference, and we'll see you the rest of the week from SALT in Las Vegas. Tune into CNBC for coverage of that, and then check the Twitter stream for all of the need-to-know information from SALT. Thanks so much. Have a great day. See you later.